This is Supply Chain Breakdown, and for the next 30 minutes, we'll be breaking down the most important topic in all of supply chain, tariffs. My name is Conor Doherty. I'm the Communications Director here at Lokad, and joining me in studio, Lokad's founder and CEO, Joannes Vermorel. Now, before we get started, take a moment, comment below, what is the industry you are most concerned about? And while you're doing that, get your questions in as soon as possible. It's very much like I said on LinkedIn yesterday and earlier today. We're here to answer your questions. The purpose of this exercise is to discuss the things, the pain points that you are dealing with and that you want concrete answers to. And with that out of the way, Joannes, first of all, thank you very much for joining me. Now, you've run Lokad, a supply chain optimization company, for 17 years. I think it's safe to say that you are the most qualified person in this room to ask this very specific question too. So, take away the pain, take away the uncertainty, take away the frustration from a purely supply chain perspective. In your opinion, what are tariffs? How do you think about them? And what are the unique problems that tariffs pose?
So again, tariffs are just taxation. So and here the main thing is the unpredictability and unevenness of this taxation. So it's not something. It is something that targets specific, products with rates that are extremely uneven. Again, depending on the origin and depending on the type of goods. So bottom line is, in the short term, it is just surprise overheads, and that's it. That's like surprise massive overheads. And the only reasonable short-term response that companies can have is to raise their prices. That's it. It's in the short term. This is the only option that is truly available to all companies, and that's exactly what companies are doing. I would say dominantly facing those situations.
Well, again, you can say that they're taxes, but again, there are lots of different types of taxes. Would you categorize this as just a normal run-of-the-mill tax, or is this in the more existential area?
No, again, the general theory on taxes, that's a completely separate topic from supply chain. But the general theory on taxes is that a good tax, if there is one, is something that has a very low rate and that is extremely spread very evenly across the economy so that you minimize distortions. So here, this is, again, as a mechanism, I would say, here we're looking at something that is the exact opposite. So the rates are very, very high, and they are extremely uneven. And so essentially what the economical theory predicts, and that's what will unfold, is that it will generate massive market distortions with all sorts of super weird things where goods are going to be shipped back and forth across the world to do some kind of fiscal optimization, and that is entirely predictable. Those things will happen. We are at the stage where companies just react by raising prices. The next stage will be fiscal optimization, and then we will start to see things that are fairly strange and would not really make sense except in order to optimize those taxes.
Well, thank you. And one of the reasons why we waited as long as we did to have this discussion was because we wanted to have some kind of data to refer to sort of frame what we were discussing. So, again, I've opened in front of me an article from Reuters from earlier, at the end of May, saying that 72% of SAP 500 companies have mentioned tariffs as their number one concern going forward for the rest of the year. And those were at earnings calls. 72%, that's the highest in 10 years. So again, not trivial, certainly. So my question before we get into the more specifics is, at a high level, now that we've had some time, there's data to talk about, how have these tariffs actually reshaped global supply chains at a high level, or has the impact been negligible?
No, the impact is not negligible.
I know.
mean, the impact is already like a very sizable inflation in the first world economy, that is the United States. That has already happened. There is also, again, we have some privileged information at Lokad, but there is also quite a few small American companies that were relying on imports that are just going to go bankrupt.
Right.
I mean, remember that when there is a taxation on the milk, it's not the cow who pay the tax. So bottom line is that we have seen also companies that had literally already ordered things from China, and the goods were already in a container moving toward the United States. And now those companies just discovered that when the container lands, they have to pay $3 million, $5 million in extra surprise taxes. So that's why those companies are hit like very, very badly. But again, the answer for all the companies who have enough, backbone to support that in the short term, their response is just raise prices. If it is right now where we are at.
Well, actually, on that note, we ran a poll on LinkedIn a few weeks ago, and the volatility, obviously the uncertainty was the thing we heard the most. And again, to cite Reuters, just this year, this is from just a few days ago, Chinese exports to the US were down 34.5% year on year. Obviously, that has knock-on effects on your ability to meet demand, your ability to forecast demand. So again, my question to you as somebody in the industry, dealing with clients, whatever, what are you hearing from practitioners about coping with this incredibly fluid and spiking uncertainty?
Reduce volume, lower prices. There is no really alternatives, and also because this uncertainty is extremely, the magnitude is very, very important. It's extremely difficult to envision right now really alternatives, because people would say, oh, okay, so we have tariffs, so now we are going to reshore all those industries in the United States. But the reality is that tariffs have been going up and down a lot.
Yes,
so
that is true.
The reality is that I think what I'm saying is that more like a paralysis rather than an immediate reshoring, because bringing an industry to another country for a given company, it's a decade-long undertaking.
It's a long-term horizon thing.
Very long.
Yeah.
So it takes literally, it's about taking a decade. You will need to train a workforce, potentially negotiate with local universities, local I would say technical college and whatnot, so that they will train the people that you need. This process will take like multiple years, especially in a country like, let's say, the United States, that is already very starved in terms of manpower for its own industries. I think there is like something like 7 million jobs that are open for the manufacturing sector. So it is already a sector where there is already like a massive deficit. So, and again, you're facing, if you're like, you're trying to make a plan for a global company and you're looking at this country where there is so much uncertainty, the reality is that it is certainly a negative impact. So obviously, United States remained, the number one economy in the world. This is United States has tons of advantages. It has like an incredibly educated workforce. It has a lot of things that are going relatively cheap energy as well. I mean, there are tons of things that are going the way of the United States, but this thing comparatively is not doing any good to the United States. At least that's my perspective, especially the uncertainty part, where it's just, from 1 week it is this, and then the next week it's something completely different. That is extremely, I think, difficult for large companies to just have a plan that accommodates these sort of variations. They can accommodate, I would say, modest, normal market variations, but here it's like having an asteroid hitting you every single week. So it's very, very difficult.
Well, again, that's a key point. And there was a period at the start of April, I believe. I don't have the numbers actually right in front of me, but there was I think it was 4 or 5 days in a row where the reciprocal tariffs between the US and China were, they just ramped up. So on Monday it was, I'm going to pull a number, this is not exact, but like it was 50%, the next day it was 75, the next day it was 100, the next day it was 155. Planning around that is borderline impossible.
Yeah, I mean, if the tariff was to go only up, that would be relatively straightforward. Fine, okay, you're at 1,000,000% both ways. Fine. This is not where planning is difficult. It's where planning is difficult is that you're at 100%. And both parties says, you know what, we do that because we want to negotiate a better deal where ultimately it's going to be like super low, even lower than it was before. Okay, so you mean it's going up with the intent of going down. You see, that's the thing. if you just say the tariff is 100% and it's not going to move in the next decade by, it's just going to stay what it is. Fine, new reality, you accommodate. You can accommodate that in your plans. But here, it is something that is much stranger and much more difficult. It's, yes, it's going up, but the plan is to have it going down. And even lower than it was before. So you see, how are you going to plan on something that is extremely schizophrenic?
Well, this is the thing. Again, just to ground this, again, according to Reuters, the current estimate for the actual cost of the tariff, the current estimate for tariff-related costs at the conservative end is 34 billion. And in fact, other surveys found that if you were to ask companies, okay, well, how much would it cost for you to just avoid all of this, US companies, for you to avoid all of this headache, just reshore absolutely everything, it would double your operational costs. And as you pointed out, that is a long-term project, because even if you committed to it, it might be invalidated tomorrow. So my question, just to push forward a little bit, is you've commented on the longer term, or the infeasibility right now of the longer term plans. In terms of shorter term plans, short-term horizon, what have you seen companies doing that have maybe moved the needle positively?
I mean, companies are currently doing all sorts of strange things. You repackage your products into this country, this other country. There will be plenty of shenanigans. What I do observe is that when you have a very, I would say, shifting bureaucratic rules, I mean, you pave the way for corruption. You see, generally speaking, one of the biggest strengths of the US is that it's one of those countries where the level of corruption is generally very low. That has been, massive advantage of the US over many, many other economies. And but here you end up with a situation where you will have bureaucrats at the borders who, depending on how their appreciation, because again, when you say, for example, you import steels, do blades that are sold at $1,000 per gram because they are intended for surgery, do they count as steel import? I'm just making things up. It's an example, but there are plenty of stuff that it's very unclear exactly in which category you fall. And depending on whether you tick a box or not, it's going to be millions of dollars of import duties or not. And that will be left to the appreciation of a person who is most likely going to be paid less than $100,000 per year. So you see, this is exactly the recipe where for corruption. And here, I think one of the problems that I would see in that I think is going also to happen is that it is difficult on the long run to really resist this sort of super adverse incentives. I mean, clearly, countries that tried these sort of things in the past did end up with worse outcome in terms of corruptions. I mean, compared to where they started from. So again, the US is starting from a very good position where they have the amount of corruption is comparatively to many, many other countries, even developed countries, very low. This is not Denmark, but still very low. And this thing is not going to improve this specific aspect.
Okay. Well, in terms of actually trying to reconfigure your supply chain in response to these, again, just some more concrete information to perhaps bounce off of. Financial Times, I'm reading it right now, reported on, there's no name to the company, big US company, building a factory in Mexico ahead of the rollout of tariffs, and then the very next week, Mexico gets hit with tariffs, and then that plan totally invalidated. So what should supply chain leaders consider when trying to adapt their networks?
That's the strange thing, is that if you have such volatility, then unless the United States is a place where you absolutely need to be inside, the reasonable response is to build just outside. You see, because as the rest of the world is maintaining relatively low tariff, because supply chain, the problem is that goods have to move through the borders many times.
Yes.
So it's very frequently, because it's not like a simplistic things, like things are manufactured in China and moved into the US. If you look at complex products, you will have like many subcomponents, and they will have to travel a lot across countries in many stages. So at this point, you end up saying, okay, if I put in this circuit, the US, it creates a massive complication. So I suspect that for many industries, the response will be just on the contrary, remove the dependency from the US and just move it somewhere else. Again, it will not be possible for all industries because, just like I said, sometimes you have an expertise that is incredibly difficult to replicate in the US, but the converse is also true. You have plenty of industries where finding the expertise outside the US is extremely difficult. So, but for the sort of industries where it is a feasibility to do it outside the US, then the situation might be to just completely extract the supply chain out of the US so that you don't have to factor a massive uncertainty of having those things that just hit you at random. And then you would just sell at a higher price point in the US, and that will be the end of it.
Okay, well, I don't want to put words in your mouth, but the way that you frame those answers, it very much sounds, and again, correct me if I'm wrong, but the way you're describing that is, okay, you have bad options and you are trying to choose the least bad option. There's no, but again, that's a crucial framing device for thinking about this. It's not, oh, how can I thrive in the present? It's how can I survive?
I mean, that the thing is that when you have protectionist measures, some local players will find themselves with an economic niche where suddenly they all their competitors that were mostly abroad have raised their prices substantially. So what are those local players going to do? They are going to raise their prices too. Why? Because they have no reason to be massively cheaper than their competitors abroad. So they will just be a little bit cheaper, but not massively cheaper. So they will raise their price and they will suddenly have very, very comfortable margins. Good for them. But does that lead to a situation where those local players who benefit from a massive boost, does it turn into, I would say, lasting strength? And here, the good news is that we have 2,000 years of history to assess these statements. This is not like a theoretical question. This is something that has played over and over and over. And here, and the 2,000 years worth of protectionist history, that you can go back, even in the times of the Romans, they already tried these sort of things. And the short answer is protected industries invariably becomes lazy and less competitive, even less. So you have like waning industries. Usually when you introduce those protectionist measures, it's because you have industries that are already struggling. You protect them, then you realize that protecting them is not enough. You need to subsidize them. Can be done in many ways. Some were more ancient and some are more modern. But fast forward a decade, you have companies that have industries that are even less competitive than they were initially, and at some point, the cost of all of that, the subsidies, the protections, is so large that you have to the state, the emperor, the king, or the elected government is forced to give up on that, and those industries just collapse. And the interesting thing is that it has been playing, this story is not new. It has played dozens of times in the 19th century. It has played hundreds of times in the 20th century, and already dozens of times in this beginning of the 21st century.
Well, to build on this, again, we're talking about multiple industries. When we asked for feedback on LinkedIn about this, we ran polls, we asked for comments. We got people concerned about aerospace, automotive, retail, just the entire gamut, obviously. But I'm just curious, from your perspective, is any one of those sectors particularly vulnerable to this, just because of the orchestration of a typical supply chain in that industry?
Yes, I think things like aviation, for example, because aviation, if you look at the US, you have Boeing, who was like the super dominant player. I mean, 20 years ago, they were literally the completely dominating civil aviation. They have been struggling enormously, and now Airbus is in front of them. But there are plenty of other companies like Embraer in Brazil who are like eating market shares every year. And this is a market where the technology is very distributed across the globe. It's not, yes, the US is very important in this market, but they are not the only, nobody can actually build competitive modern aircraft if they only try to do it locally. Russia has its own program, but and it's producing a few jetliners locally, but they are absolutely not competitive with what the rest of the world operates. Same thing for China. So you have this thing, and what will it mean for aviation? It means that maybe they will just move entirely out of the US and keep only things like the design, the conception, the engineering, where, again, there is quite a lot of talent in the US. But for the manufacturing part, they would just be completely outside the US. For other sectors like automotive,
yes.
The reality is that automotive, I would say, is already dominantly sourced and built. Everything is. I would say it has been a move that the automotive industry has been doing, I think, probably more than 2 decades ago, which was to build cars locally. That leaves the question of the semiconductors, which represent, a massive price of a massive fraction of the price of modern cars are actually semiconductors. So that semiconductors, it's just aviation. It's a very, very global market. So my take would be for cars that will not change much. The amount of cars that were actually imported was already like a small fraction for at least for very large markets like the US. I don't have the numbers in head, but it was the amount of cars imported in the US compared to the one that were built. The one being built locally was already quite dominant. Now, again, that would mean that as far as semiconductors are concerned, the price will increase, and so the price of US cars will just increase accordingly to the overhead that you have for semiconductors. But other than that, it will not be an existential threat to those industries because, again, you already have tons of companies like Toyota who are manufacturing in the US. You can very well have an industry that is just dominated, even if it's locally produced, it can still be dominated by foreign companies.
All right. Well, I just checked, and I've received, because again these are running on different pages, but I've received that there are a few questions already to get to, and there are some that were sent to me privately. So I will close with the following question, which is, again, obviously you called tariffs taxes. Okay, fine. Are tariffs always a bad thing? They hurt. No one's disputing that. It's a pain. No one's disputing that. Are they always a bad thing? Or in other words, do they present any kinds of opportunities for companies who are living through them?
So, I mean, again, are there bad things? It's, if you ask the question in terms of economy, we can look at history. And the history is very clear. We have like 2,000 years of history. And the answer is a resounding yes. So tariffs are a bad thing. Yes. They have been. And this is not a value judgment.
Yes.
This is something that was put to the crucible of the experiment. It was done again, hundreds of times. It just works extremely poorly. It is, for me, it's in the same category that rent control damaged cities.
Yeah.
The rent controls have, even in Mesopotamia, the interesting 3,000 years ago, they tried rent controls. It went very poorly. So this is the sort of things where it has been tried many, many times, like hundreds of times, and it went poorly every single time. So will it go differently this time? I would say no reason. Now, the thing is, like all economic distortions, there are some people who profit from it. That is true. But that is true from all economic distortion. If I decide, as, let's say, President of France, that now companies who do predictive supply chains needs to have like massive subsidies, massive billions. Yeah, I mean, for me at Lokad, fantastic. For the French taxpayer, not so great. So you see, it's when you introduce economic distortions, there is always some winners. So yes, there will be some winners, no problem. But so for companies, can you actually build a strategy to be among those winners? I would say, considering the amount of erraticity of what is going on right now, I don't think so. So it will be more like winning the lottery. You're lucky, good for you. But fundamentally, it is not like a strategy to position yourself. Again, the reason why I say it's a lottery, I don't think that anybody really predicted 6 months ago that some tariff from some countries for some products would jump to 100%. You know, it's and whether it will last or not, etc. So if you can't predict it, it's very difficult to say that you can have a strategy built on something that is like so erratic.
I would agree, and just as a final addendum to that, again, I read a report from PwC earlier today, if I recall correctly, and it said something like 57% of executives said that when it came to decision making, they could not make decisions fast enough, given the erraticity you're describing there, and that speaks. On one count, that speaks to the environment being very, very stochastic, very random, lots of uncertainty. But there's also an inward perspective there which says, okay, well, how are you making decisions? Is it incredibly slow? Is it incredibly bureaucratic? And if so, what can be done about that?
Yes, but again, I think we have to be realistic. Whenever you can change policies, like, for example, your prices very swiftly. Yes, that's possible. But it is not realistic to say, I am going to take a factory that took like 2 years to design, 3 years to build, and that tap into a pool of people that took 5 years to train, you know, and overnight displace that to some other place in the world. Those processes are relatively slow. Yes, companies can be incredible and do that at a pace that is quite high, but even, you know, the fastest companies, it will take years, and that's why I said the stage right now is tax optimization, where it will be mostly shenanigans that are highly predictable, where people are going to find loopholes just to navigate that, but the true in-depth reconfiguration will take years, and it will probably be delayed until people are confident that the rules of the game are kind of set. You know, again, if the goal was there will be tariff at 100% for everything from China, and this thing is immutable, it will stand, you know, half a century, and okay, in this sort of case, a lot of people would invest, you know, to rearrange the supply chain right now based on those new rules. The problem is that it can be, again, I go back to the fact that both parties are announcing that actually they want to negotiate something that is extremely low and better in the end. So that may or may not happen. And again, the time frame is like completely up in the air.
All right. Well, Joannes, thank you. I'm going to switch over to some of the questions that came from the live chat and that were sent privately. So first question is from Constantine. Joannes, what would you recommend to companies with very thin margins who may not survive these tariffs if it continues for a long enough period of time?
That is very tough. I mean, that's very tough. I was saying that
we can give longer answers
many
later.
companies will just not survive. So
okay.
You see, and that's what I've been seeing among, you know, the ecosystem of companies that we serve in the US. Yes, some companies, US companies may not survive. Obviously, plenty of Chinese companies will also not survive. Let's be clear. But again, in the short term, I think the thing is that you will have to raise your prices and do that even ahead of time compared to your competitors, because you see, you end up with a situation where if your competitor doesn't raise their price, they are just going to run out of stock. So that's the sort of things where, yes, it might be very scary, because usually you wait for your competitor to raise their price, but here we are in a situation where you raise your price, and don't worry, competitors who are not raising their price are just going to run out of stock. And then once they have liquidated their stock, they are just going to realize that replenishing this stock is more costly for them too. Then there might be, again, just like they said, with tariffs, some companies are lucky, and some companies might be absolutely unlucky. And in this case, there is not really much that we can recommend except, you know, changing the business entirely.
Okay. Thank you. The next question is from Sunil. Forgive me if I've mispronounced that. Speaking of all the industries at large, speaking of all industries, speaking of industries at large, excuse me, is reshoring and nearshoring a feasible strategy? Again, I would say that we talked about short term and long term before.
Or the exact opposite. You see, that's why I say it goes both direction. If you have a country, you see, it's comparative. Obviously, if you had a business where being in the US is a massive, massive advantage, then the tariff change nothing is still, massive advantage. If you had a business where being in the US is just never going to happen, just absolutely no. Let's say, for example, is a super low, ultra cheap textile industries of Bangladesh going to move to the US? Hell no.
Probably not.
Even if you had like 200% tariff, Bangladesh is still going to be way cheaper than the US workforce. So case solved. So you see, the question is for companies that were just at the edge, where it was, should I be at the US? US has plenty of advantages, but there are some other places that for this specific industry you were, on the fence. And what I see is that many companies might actually decide to do the exact opposite. Let's be completely outside the US so that when we want to do this back and forth with other countries, we are not hit by the tariff again and again and again. Because yes, you will be hit. Being outside the US guarantees that you will be hit by tariff, but you will be hit by tariff only once. If you have, for some reason, to go back and forth many times, then it is a better options to be outside and then take the hit of the tariff, but only once, as opposed to get a hit a dozen times because of those back and forth.
Well, I hope that helps. Thank you. One question that was sent to me privately from Bertrand. You spoke earlier about aerospace, so it's related. What do you recommend for MRO companies trying to maintain repair schedules this summer? So again, a very short-term horizon there.
I think the beautiful thing about aviation is that you can send your aircraft abroad to have it repaired abroad. That's already, we have clients that are already doing tons of maintenance. In fact, I would say a big portions of the jetliners used by US passengers are already maintained in the south of the US. This is already happened. This is already my take is that if it's too complicated, then you just send your aircraft outside of the US. Maintenance will be done out of the US, and then the aircraft comes back in the US, and problem solved. So for those MROs, I think that's exactly the sort of situation where it's not really about reshoring your industry, but on the contrary, just make the move of actually do the maintenance out of the US, and you're out of the nonsense of having like super hectic tariff.
All right, well, Joannes, thank you. There are no other questions to get to, so I'll just ask you for a closing thought. Any parting advice for people trying to, again, survive the tariff crisis? And again, we'll come back to it in other formats, but parting advice.
I believe that it's part of a broader culture of being able to assess, risk, and
yes.
and that's where I think where having this sort of probabilistic perspective where you put percentages of risk, and it's very scary because it means what does that mean in practice? That means let's assume that there is like 2% chances that we have like a war every year or something, 2% chances that we have like incredibly damaging fires like Palisade in Los Angeles. You can have all sort of random problems, and it goes completely against the mainstream view to just have your one forecast that you project and you're good. No, here it's about putting I would say a probability on calamities. And yes, tariff joined the list of calamities, so you'd have a war, lockdowns, fire, tsunami, and whatnot, and just try to start, I would say, risk-adjusted decisions. So you see, the thing is that there is an element, there is risk, and this needs risk to be quantified,
Yes.
and you need to quantify that in dollars. And even approach that as you would approach insurance for
Exactly, yeah.
There is a possibility of having a fire in your factory, then you need an insurance. And here, do you approach that with wishful thinking, like the factory will never burn, or do you start investing into something that would edge your situation? And again, the problem is that investing in edging the situation is like the fire insurance policy of your factory. It's not cheap. It is quite expensive.
Yes, well,
but that's part of the culture of managing the risk frontally, is to admit that there are tons of costs involved in that, and there is no magic. Those costs have to be addressed. Otherwise, if you are unlucky, just like a fire in your factory, the factory can burn down, and then you don't even have the fund to rebuild.
Well, again, this is certainly what I was talking about earlier when I said even within chaos, even within an emergency, there are possible avenues of opportunity, even if that's just self-improvement from the perspective of companies, your perspective on decisions, your perspective on how you approach your own business. Or have I misunderstood what you just said?
Yes.
Sorry.
Yes. I mean, obviously, I would say yes. I was thinking, but opportunities to improvement. Let's be real. I think one of the main problems that supply chain teams have is lack of bandwidth. So when you are having even more chaos, let's be real, things. It's not exactly the time where companies can just contemplate ways to make things better. It is just firefighting, and let's be real, they won't be much beyond firefighting for as long as those things continue. The idea of like being able to do like wartime heroic efforts where you manage to develop fantastic technologies while suffering the fire of the enemy. I mean, maybe a few companies will pull that off, but my suspicion is that it will be a very, very happy few segments of companies.
All right. Well, Joannes, I don't have any more questions for you. Thank you very much for your time. And to everyone who's attended, thank you for your questions. Thank you for reaching out personally, both to Joannes and me, participating in polls. We're going to do more of these. And really, it's nice to do topics where people connect. So they reach out, they send us their concerns, their questions. So if you want to continue with the conversation, feel free to connect with me or Joannes privately. You're already on LinkedIn. So with that, I say, Joannes, thank you very much for all your patience and your great answers. And to everyone else right now, I say, time to get back to work. That's pretty good.
Yes. Yes, it was.
So I think there was about...